Kirk Duckwall here with your Twin Cities real estate agent news and forecast for March 2026. Well, are we finally seeing more buyers engaging into the marketplace and not just over the last couple of months, but even over last year? Well, we'll get into that in just a second, but wanted to mention a few classes that we have coming up, and this is open to all licensed agents and brokerages across the Twin Cities area. First one is AI in real estate. So here we're actually going to be doing a deep dive into not just like video tools, but also like CMA GPT, the pros, the cons, the risks of some of these different tools out there. So we're going to be reviewing Meta AI, as mentioned, CMA GPT, VideoTour.ai, as well as talking about Blonde Waterfall and some other AI tools out there. And yeah, just to give a quick example, like here's a listing that I recently put up utilizing some of these tools and how quickly you can put these little videos together. And we're going to be going through even the cost benefit analysis of these tools, which free ones work really well and which ones to avoid, as well as the ones that may cost something that may be worth taking a look at as well. So have that class coming up on April 8th. That's just a 1-hour class in St. Paul. We'll have links below to all these different classes. We have a Decade of Defects. This is going to be one that's hosted by Structure Tech at Bell Plaza in Bloomington. 2 hours of CE for this class. And then Maximizing the Open House. Seems pretty basic, but we're actually going to be getting into when are the best times of day, how long to be having the open houses, what are the best locations, sign placement, questions to ask to get the most engagement and most conversion on that. Another 1-hour class that'll be in St. Paul as well on May 12th. All right, let's dive into the market here. Starting off with the MAR data, new listings, starting to move up right now. The problem is we're seeing that the pending sales actually are surpassing where they were last year at the same time. I mean, that's some good news for our market out there for sellers, but it is bringing that inventory a bit tighter as well. So closing that gap over last year. And with the buyer activity that we're seeing, coming out from December into January, we were really tracking behind there. And then towards middle of February, we started tracking ahead. And we're holding that all the way through March 8th. And then we get to the snowstorm and had kind of a pretty big impact there with that. And we can see the showing activity dropping off drastically there. However, I do expect a full recovery and get back into those really positive numbers. Now, interest rates have been playing into this a bit. We've actually seen the mortgage purchase index getting better over time. However, we did see a couple of weeks ago the bond market react pretty negatively to the conflict over in Iran and watch as oil prices moved up. Watch the bond market moved up, which then moved interest rates. So we can see a pretty significant jump there from a few weeks back where we were, under 6% and then approaching 6.5%. But we have seen some easing there as we've watched oil prices come down and some economic numbers that have helped interest rates kind of getting closer to that 6.25. So where does that put us? Okay, from Home Free TC here, we have from their data, 79 accepted offers. They're seeing inspections waived down to 23% of the time. Cash offers down. That was upwards of 20% a few weeks back, down to 11%. Conventional at 74%. FHA holding strong at 8%. The average purchase to list price is up over 100% at 100.6. However, that is down a little bit over the previous week. Median right at 100. However, factor this in there, that closing costs being wrapped in 38% of the time. So bringing that number back down a little bit. Noticeable jump in appraisal gap coverage up to 27% of the time. So yeah, this is showing that market getting really competitive out there. So let's take a peek here at what we are seeing as far as that competition as of right now. Showings per week per listing, 250K to 500K price range jumps from a 4.36 showing average to a 4.71. That's pretty competitive. Just not as competitive as last year. So we're down 14% there, but that's that inventory being higher. Now, we do see week over week this number down a little bit, but the primary factor is this price range. Actually, the price ranges that are pulling the market ahead on the total showings are actually the 400 on up above $1 million are tracking up. So we see just down 2% on that 250 to 500 price range. But again, this is factoring in as the pending snowstorm coming around. Things were a little bit slower there, and we're going to see those numbers being affected this week as well as I'm recording this, obviously. Here's a big one. Future showings, stuff that was booked out, big jump. I think the snowstorm had something to do with that as well. We're seeing a rise again in the search match rate. However, a drop off in engagement. Again, I'm going to blame these two numbers on that snowstorm. You're going to hear me say that a couple of times in the next minute or so. As we come over here, we do see positive change, 34 days on market, down to 29.2. Here's another one, goes from 6% cancellation rate down to 5. Now, the market meter. This one is important. So the market meter forecast, where are we going? Okay, back to that snowstorm again. We are coming up and we hit a 5.58 on the market meter, which shows us peaking out still at the end of March with where our market lies. So it's strong, stable market range, not full-on seller's market, but strong, stable market range. Peaks out at a 5.74 on that scale before things slow down. So advice for buyers, hey, it will start getting better as we cross into that April timeline. However, I'm going to put this in there. That snowstorm, if we took Sunday's drop in activity out and we look at what happened to the market meter then, that number jumps to a 5.85, which then in the coming weeks puts us into that seller's market. Still, though, peaking out at the end of March. So, yeah, for buyers, advise them it is going to get better. Just kind of got to wait for that end of March timeline as things start to warm up. We'll see things start to ease, more inventory coming into the marketplace. But for sellers, yeah, you might want to start moving fast, especially in that first-time home buyer price range. This is where we're seeing the peak activity levels right now. Now, we know that for homes above 500, that peak timeline moves by 3 to 4 weeks. So they're going to see a stronger later April into early May before things slow down. As always, hopefully you found this information valuable. Check out those upcoming classes. Again, no cost to those and open to all. Take care and have a great week.